Good morning and welcome. Happy Hump Day, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and I welcome all of you on another scorching hot day here in the Valley of the Sun. I hope you find the AC. It's only going to be 115 today, but then after that, it's going to cool off, be 112, then 110, and then somewhere below that after that. If you survived yesterday, I will tell you right now, I blame myself, but I kind of blame you guys too. You know, we said, we were going to close a little early yesterday, and we did. We didn't close. Our phone lines were open. But I went and played golf yesterday on the hottest day of the year with my buddy. I'm not the smartest guy, right? And I've said this. And those of you that know me and that have met me know that I have a body for radio, right? So it's not like, let's just say I could lose a few. It wasn't that bad for about 12 holes. And then it got bad, right? Holes 13 through 18, let's just say, I finished the round is about all I can say about it. But I did get some exercise in, so I'm going to count it as a win. I don't think I'll be doing that again anytime soon. I am definitely a little lethargic today, trying to stay hydrated. But I thought I'd share the way. If we were busier, this wouldn't have happened. Right? I would have had to work. And so, therefore, ergo, I blame myself because obviously I'm not doing a good enough job in getting you to understand why it is that you need to get that insurance. You need that wealth insurance. And it's so funny. So many people want you to believe that you don't really need it right now. Right? Most people, if they're being honest with you, well, eventually you'll need that gold. Eventually you're going to need the silver. You just don't need it right now. And they're right. But I'll give you this analogy. Right? Do you buy your car insurance after you've been in an accident? Right? That won't work very well. Right? The same rule applies here, and you start thinking about unbelievable things going about today. We had new home sales, missed big, real big. Prices dropped significantly. We have to talk about commercial real estate today. The Chinese have vanished. We have to talk, right? Homes again. California home sales are starting to fall precipitously. Why? The Chinese have vanished. Not to mention we have the EU here today. Matter of fact, at about, I think, 10:30 our time. They're going to come out with the president, President Trump, and the EU trade people are here. It looks like, I don't know what's going to happen, but we could be seeing $25 billion in tariffs on European automobiles. The EU, they're playing touch ground this morning, and they immediately wanted everybody to know they have their list ready for tariffs on U.S. goods. I'll keep you posted. If I have time, I'll get to that, but there's so much ground to cover in what is happening in so many of these signs, right? They're there. Right? They'll tell you they don't see them, right? And they'll talk about, the economic GDP is going to be great for a quarter. I mean, let's face it, if you gave all the richest people and all the richest companies a huge tax break, you'll get a little bit. Yesterday we talked about $12 billion for U.S. farmers. And again, you know what? Farmers don't want that. I mean, they need it, but they don't want it. Farmers want to go to work. They don't want to hand out. We got to find a way. I think, listen, we're going to have to break a few eggs. We're just going to. Right? This is the bad hand that we've been dealt, and I think I'll say this. Get ready for the next leg of stagflation. It's going to be, and I've been saying it all year, the second half is really the part that really, really matters, and you need to be ready. You got to be ready before it happens. You can't prepare, I need to get ready for a flood because my house is already flooding. That doesn't work. Have to do it now. This is really, it's the best opportunity this year, period, right? Because we really have a false rally in the dollar. We have the Chinese who are going full tilt in this. Matter of fact, they were in South Africa today announcing, of course, ironically, trade deals with those nations. And talking about, they're digging in. We haven't won around yet. We'll see what happens. 10:30 will be interesting. Obviously what we would love to see is some form of an agreement where both sides can say, okay, we're happy, we get a little bit. Maybe the EU doesn't lose that much, but at least the rhetoric so far today does not appear that is going to be the case. So we're going to have to keep our eye on it. But again, it's not the biggest news. The bigger news has to do with debt, has to do with the Federal Reserve. They couldn't find their backside with both hands. It was so funny. Great article on our website today on the Daily Reckoning, Jim Rickards, and he brought up some of the sayings that they used to. Remember the green shoots, right? We had green shoots. Remember that one? And so many more. We'll talk about all the things that are going on and what you really need to get prepared for. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. We all want this to work. I do. Right? Of course, really what I wanted is, can we go back to 1913 and not create the Federal Reserve? That would have been the best thing for America. Outside of that, right, we can't do that, right? Because we created it, and now we went from a nation that had no debt, or essentially no debt, to a nation that's got over $21 trillion. You got to remember, the Federal Reserve, they got another $4+ trillion still on their balance sheet. I mean, unfunded line. When you really get down to it, I don't know how big the number is. I mean, the low number is probably $70 billion or $70 trillion. I've seen numbers as high as $300, $400, $500 trillion. And of course, it doesn't matter when you have this Federal Reserve with a printing press and all of these things, and everybody becomes poor. I don't know how many more facts we need. I don't make them up. These are the numbers that the government puts out, that the Federal Reserve puts out, right? And the difference is in about the spin. We all want it to work. I want these tariffs to work. Right, I want the EU to come today and say, you know what, you're right. We took advantage of you, and we're going to let you renegotiate, and we're going to take less. Right? I would love that. I would love for the Chinese to say the same. So far, that's not been the case. So we got to prepare for that. We have to. Right now, we've got a stock market that's what we've had this rally now for years, and obviously the last 2 years it got big, right? About 40% of the move here in the last 2 years. Most of it on they knew they were going to get a big giveaway, right, in the tax cut. Some of it, though, is, let's face it, all the deregulation, all that stuff, there's a lot of good in there. And we want this. Listen, we want Wall Street to keep rallying. But unfortunately, we have to be ready for when it doesn't. Right? You think about the numbers that we've been going over. Now we got to worry about GDP. Right? We're going to get the best number Friday. I don't know what it's going to be, right? When he said the numbers are all over the map, 2.7 to 5.3. My guess is somewhere around 4. But that's going to be the best. And then we're going to be, declining, right? Q3 is going to be less. Q4 is going to be less. And not because I want them to be less. It's just because the debt levels are so high, wages did not rise. I mean, they said that they did, but they didn't. They didn't. American consumers tapped out. Credit card delinquencies, auto loan delinquencies, car sales are down, home sales down big. But existing homes, I knew that number was going to be down. New home sales, we knew that was going to be down, but now it fell way more than expected, down 5.3% in June, the lowest level going back to last year on new home sales. And here was the thing that I thought was really interesting was the price point. Fell to 302, which still is ridiculous, right? You think about the average person buying a new home, they're not buying the mansion. I mean, there are some. Most are trying to live in some what I call the postage stamp neighborhoods, like we did when we lived in Anthem. Heck, Arlene lived in Anthem, right? She knows we were Anthem neighbors, right? New homes back in 2000, I tell the story all the time, it was $130,000. Same exact home today, they want $300,000. I'm not kidding. $300,000. Who can afford that? So the prices fell to $302,100 from $315,000 the same month a year ago. Now, where did we see this before? I mean, we've seen it before. Now, all of a sudden, if you bought in certain places, the home you bought last year is now worth less. And again, the laws of supply and demand, they're trying to pretend like they don't exist. Right? They always try to convince us that somehow it's different this time. Of course, when we always say it's not. Why? Because the numbers say so. When you have less sales, what happens? Price goes down. Right? When you have less sales, price goes down. That's what's happening. And of course, you know what I find interesting is the Chinese have left. Commercial real estate sales matter. China was the net sellers of commercial real estate for the first time, well, since they've been buying commercial real estate. So I'll say ever, because they really didn't start buying anything until the millennial rolled over, and we gave them all the money to do it. Net sellers. California now, home prices and sales in California falling like a rock. You know why. Right? Got to prepare for that. And we don't want it to be that way, but we got to prepare. You know, you think about like home appreciation, like Denver and Phoenix, right, where we know that it's not sustainable, right? Because the simple reason is most people can't afford it. Right? So you got to prepare for that. We got to prepare for higher inflation. Why? Well, there's a lot of reasons. Well, listen, inflation was coming anyway. Right now we got tariffs, and this is kind of the pain that we have to go through if we really want the jobs back. If you want to get out of your Uber or Lyft, if you teachers out there want to make more money, right, if you really want to put America back to work, into jobs where, let's face it, if you actually get laid off, you can file for benefits. Got to get the jobs back. Car companies announced earnings today. Ford, General Motors, Fiat Chrysler. They all said the same thing. Tariffs have made things more expensive. And if we get the tariffs on the imports, which you would think would be good, they're like, it'll actually make things even more expensive. And oh, by the way, car sales are falling. So another thing now we got to prepare for. So the two big ticket items, housing falling, car sales falling, but we're going to have 4 and 5% GDP. That doesn't make sense. Got to prepare. Got to get ready. Right, here's the other thing that they said, which really was what they didn't say. I didn't hear a single one of them talk about, we may bring factories back in the United States. Not one. Matter of fact, they're all continuing to do what? Move more production out. The only thing they want to build here are SUVs. That's it. Why? Because even with a 25% tariff, it's not enough. Right? Because Mexico, they still only make $2. So how big does it have to get? You got to prepare. We've got to prepare for the Federal Reserve. These clowns don't know what they're doing. Right? When's the last time we heard one of them come out and say, you know what, we got an issue here, right? The only one that anyone ever talks about was Alan Greenspan talked about irrational exuberance. Said it once. Now, I repeated it a lot, but he said it once. And that was like a year, maybe 2 years before the tech bubble actually blew up. I mean, that was it. There was no other warning from him. They didn't actually believe it. Right? And they're still raising rates, and they're talking about how everything's so great. And then anything they can't explain, they're like, oh, it doesn't matter. Bond yield curves, it doesn't matter this time. Matter to every time, but somehow this time it doesn't. Right? Wages not growing. We don't know, but it doesn't matter. Workers are better off. Why? Well, because we said so. Look at the unemployment rate. Of course, what they don't want to say is, you know what, look at the unemployment rate because that number doesn't mean anything. Right? It's not the right number. It's a fake number. Right? That's not the number that we used to track. Right? And you think about when we went off the dollar or gold completely, 1971. Think about what's happened since then. Right? $400 billion was the debt. And I've told this story so many times. Most of it was World War II, by the way. Right? World War II was the first time we had a world war, and we really didn't pay the debt down. Most of the other wars, we'd pay, the debt would go up, and then we'd pay it down. But we ran just as many surpluses as we did deficits, and they were still small in the 50s and in the 60s. It wasn't until they closed the gold window. Now the debt's almost 21.3, or a week or two away from 21.3. Let's just round up. Let's fast forward and pretend we're in late August. 21.4. We've added $21 trillion to the debt from 1971 to today. Do you think maybe that's where the bubble is? Or do you think that's why they're out there manipulating everything? Why they've changed how they calculate why did they change the way they calculated inflation? Listen, they had a bunch of reasons why. Number one, they wanted to give themselves credibility right after the disaster that happened in the early, mid, late 70s. So they changed it to make them look better. Number two, they wanted to rob everybody that collects Social Security. They're just robbing you. Right? Because they knew. Come on, I mean, we got baby boomers are going to retire. We know we can't afford it, but could you imagine if we had to give them 5% and 6% and 7% COLA? No. Let's give them nothing. Well, how are we going to do that? Well, I got an idea. Right? And they start substituting and come up with, some economic formula that doesn't pertain to anything in the real world. And they've been able to get away with it. But now, listen, everybody's in debt. Old people, right? Think about this. When people retired, when my grandparents retired, I'll never forget it. Because that's when, they retired and became full-fledged snowbirds. Their houses were paid off. And not just one or two, all of them. Right? All of the older aunts, uncles, grandparents, their houses were paid for. Now people retiring, I don't want to say none because that's not true, but the vast majority of them have a mortgage. Right now, they all got credit card debt, auto loan debt. Right now, and again, not all, most. Right, the biggest growing debt of old people, student loan debt. Can you imagine? I retired today and I got $50,000 in student loans. Young people, you didn't go into debt to go to college. Not when Ben Bernanke was going, you didn't. Right? You didn't go into debt. Now these kids, they're graduating with $30,000, $40,000, $50,000, $100,000, $200,000 of debt. Largest income growth for parents. Right? student loan debt. That was a debt that never existed. No one even had credit card debt in the 70s. Right? They've just loaded it up and loaded it up and loaded it up. And when you look inside the number, forget the headline. I don't know what GDP is going to be. I do know it'll be a good number for a quarter. I'm hoping to get 2. But I know, because I look. The consumer, all that's happened if they spent money they didn't have. And everybody, right, they start running out. And you're hearing the things, the foreclosures, the repos, the credit card defaults, they're all there. And you got to prepare. And when you don't, right, you get what you get, right, which is it happened, and now I'm going to be buying, at $1,500, $2,000, $2,500 gold. That's what's going to happen. Eventually, you always call. But you the ones that are smart buy before they need to. That's the whole point of insurance, right? Buying before you need to. Does anybody listening actually have faith in this Federal Reserve that they know what they're doing? Do you really? Do you really think we should be raising interest rates 2, 3, 4, 5 more times? Patriot Radio News Hour, halftime on a Wednesday.
This is the Phyllis Schlafly Report, a daily look at the significant issues of our time from an experienced conservative perspective. Sponsored by Phyllis Schlafly Eagles, this broadcast continues the legacy of Phyllis Schlafly and stands against forces that mock traditional values, deny freedom of religion, slander America, and would redefine the family. Now, the president of Phyllis Schlafly Eagles, Ed Martin.
1 year ago, President Trump sent out a tweet explaining a defining part of his legacy as president. He tweeted, quote, "My use of social media is not presidential. It's modern-day presidential. Make America great again," end quote. Trump knew he needed a new medium to communicate with the American people, so he made the bold move to start the first unfiltered presidential Twitter feed. Trump says what he wants on Twitter without any interference from the fake news media, and they can't stand it. That's why you hear so many pundits talking about how terrible Trump's Twitter is for the nation. The pundits don't want the American people to hear the president without their highly editorial interpretation. When they talk about his social media, the establishment says President Trump is doing something completely different from other presidents. That's just about the only thing the establishment is saying that seems truthful. Like Trump said, it's not presidential, it's modern-day presidential. It's completely new. Other presidents have set their own precedents throughout the years. George Washington was the first to form a cabinet. John Adams was the first to live in the White House. Thomas Jefferson was the first to address Congress in person. Every president has had their own precedents, but Donald Trump's will be remembered as one of the most important. Trump uses technology to bring the presidency into the modern age so every American can hear from their commander-in-chief. Don't let anyone make you feel ashamed to support Trump's Twitter feed. It's the new modern-day presidential. The media will be fighting him to the bitter end, but that is only because they know he's gained a foothold in their monopoly on the thoughts of the American people. We need to abolish the double standard that politicians don't tell the truth, but we still criticize them when they choose to speak their minds. We finally have a president who shares his totally unfiltered thoughts with the American people. As far as I'm concerned, that's a precedent worth celebrating.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. As President Trump fulfills his campaign promises, his accomplishments on trade, immigration, the economy, and protecting the unborn should be celebrated, not ignored or diminished. To track these victories, go to phyllisschlafly.com and find out what's next for the Trump presidency at phyllisschlafly.com. Thanks for listening to the Phyllis Schlafly Report.
800-951-0592. Gold's up 4, $1,230. Silver's up 6 cents, $15.52. You got some announcements to make. Colorado, August the 18th. Circle it on your calendar. We are going to be doing a live remote from our newest advertiser, Grandpa's Gun and Pawn, on August the 18th. The last remote done at KHNC that I know of was when they used to do the picnics in the park, and there was a payphone there. And I'm not kidding you. Don and Jen, they'd put put quarters in the payphone, and all of the talk show hosts would get on the phone one at a time and then hand it to the next guy. Ryan and Jason will be at Grandpa's Pond doing a live remote on August the 18th. We're going to be having an event. One of the things that they do, obviously, they are the second largest gun seller in Colorado, I believe, if I'm right. I'm pretty sure I'm right about that. They got all kinds of stuff there, from fishing, hunting, you name it, and so much more. Bow hunting season's coming up, so you may want to get in there, check that out. Also, we're going to be doing, the MC Hammer used to run the commercial with the broken jewelry and all that stuff. If you have some jewelry that you want to turn into cash, and I'll give you more details here in the next week or two, but we're going to do a big event for everybody that wants to bring some of that stuff in, and whether you want to, we'll have product there. We're going to feed you some sort, nothing extravagant. I think we're going to do pizza and stuff like that. But August the 18th, more news to come there. Big changes, and I know I keep telling you, but Colorado, it's coming. We're doing a lot of things behind the scenes there that you haven't seen yet. But here in a couple weeks, you're going to notice a big change coming, so stay tuned. But August the 18th, as we continue to put it back where you found it, I think it's huge, whether it's here in Phoenix, whether it's up there on the Front Range, right? I hope that you support the advertisers that are on the stations that we're on, and support like-minded people. And when you're doing business with us, one thing that you can know that also separates, we put it back where we found it. And we are huge supporters of not only KXXT here in town, and I can't even tell you how many events we've done with them. We supported the Dennis Prager and Adam Carolla in their event that they had talking about the No Safe Spaces tour. We did the Freedom Summit here in Phoenix as well. Right now we're helping KHNC, and we're only able to do that when you do business with us. I mean, really, it is that simple. So I hope you take the time today, tomorrow, Friday, place those orders. We got a lot of great things coming in both places, both markets. In Phoenix, too, if you have some jewelry, and, because it's hard, you don't know who to trust, you don't want to get ripped off, you don't want to get taken advantage of, we're going to set something up, too, where we're going to send it up there for you, and I'll get you all those details, but I want to at least get the date out there, August the 18th, and we haven't that day for sure. We're thinking something like 11 to 3, it may be 10 to 2, something like that, but all of that coming. I just wanted to get it out there, up there on the Front Range on August the 18th. That is a Saturday for those of you that don't know. And talking about preparing, again, right, we can live in denial if we want to, right? We all want things to be great again, right? We do. Here's the reality. Look at what you're seeing already, right? Everybody's getting out of line now. I was watching Fox this morning, and they're the big Trump supporter people, and they're like, all these trade things are bad, and this is bad, and that's bad. And of course, all the Boeing came out, said it's bad. Their stock's down big today. General Motors down big today. Ford down big today. Chrysler, Fiat down big today. And talking about cost and profits and all that other stuff. And I told you, this is going to keep continuing. Whether it's the strong dollar, right, which Donald Trump's already said, hey, we can't have it, right? China knows. Look at what they're doing. They know. How do you win here? Well, you devalue, right? You offset. You got to offset somehow, right? So far, the only thing we've come up with is, well, can we give $12 billion to farmers? Are we going to give what? Are we going to give $50 billion to Boeing, $100 billion to the car. I mean, obviously that can't work. I told you about Southern California home sale. I'm going to give you the numbers. And I don't know what it means. I mean, I think I know what it means. I think you will too. Home sales in Southern California have hit the brakes, and that's a kind word. Falling to the lowest reading in over 4 years. Right? Not 4 weeks, not 4 months, 4 years. Sales of both new, existing, and condominiums. Okay, so they got the whole market. Dropped 11.8% year over year. You heard it right, 11.8%. By the way, in May, they were down 1.1%, so they're down over 12%, 13%. The area covers L.A., Riverside, San Diego, Ventura, San Bernardino, and Orange counties. Listen, this is the big area. This has always been a leading indicator for housing. Now, again, well, we don't know if it'll be true this time, but historically, this is where you go. Commercial real estate, you go to New York City. When you talk about residential real estate, you start here, Southern California. That's where you start. Says the weakness was especially apparent in sales of newly built homes. Down 47%. They said sales below 500,000, because there aren't any, down 21% year over year. Deals, and here's what we really got in industry, of 500,000 or more was down 3%. By the way, if you went to home sales of $1 million or more, they were up just a tad. But yeah, $500,000 or more, down 3%. $500,000 or less, down 21%. We saw the prices in new homes fall again, and probably because Southern California, no one's buying them. Right? And why? Right? Americans still want to own homes. You know why. Right? And these are the things. Listen, let's hope that somehow it ends up different. But you think about it, right? The Federal Reserve, they're going to keep raising rates. It makes all these things even more expensive. No one can afford them now. Got a great special coming up for you next. 800-951-0592. Today's special, and it's a good one. We've got an old one and a new one. A $5 Liberty gold piece. Right, those are the old ones, 1866 to 1907. And then a $5 American Gold Eagle. And those are the 1/10 ounce. Those are the golden dimes. This is fractional material. I mean, let me tell you right now, if you lived in Venezuela today, this is what you want to have. I don't know if you see that, right? They're talking Weimar Republic type stuff. Actually, it's going to exceed that. They're saying that inflation in Venezuela is going to hit 1,000,000% by the end of the year. I mean, I don't think anybody actually is doing anything but barter there. But for us, what's most important, the price, you're going to get one of each. A $5 Liberty gold piece. Right? That's the older one, quarter ounce. Then the newer one, the $5 American Gold Eagle. That's the 1/10 ounce or the golden dime. You get both pieces for $500. And for those of you that can't pick up, shipping is free when you order this package. And if you want to add silver eagles or you want to add dimes or quarters, you want to add 20s to it, great, shipping's going to be free. $500, but here's the deal, though. I've only got 50 packages because that's all of the older gold pieces we could find. It's $500. No shipping. 800-951-0592. Take the time, put it away, put it back where you found it, and help yourself get ready. You know it's coming. We know. Right? We know. The stock market going to go up forever, and we've probably seen the best of it. Because let's face it, it went up 30-something% last year. I'm sure we've seen the best of it. We know that the deficit, already. I mean, the CBO in 6 months. First 6 months, not even 6 months, but 90 days ago, they said we wouldn't hit, the small number wouldn't hit $1 trillion to 2021. Now it's next year, right? And I'm telling you, it's going to be close this year. It's going to be real close. GDP is going to be important, and exactly how close. But this is going to be something that's going to be very, very close. And it doesn't really matter because by 2019, 2020, 21, 2, 3, 4, we're going to add 20 more trillion to this thing. How are we going to pay for it all? Every month now, the Treasury's been adding $1 billion a month to the 2-year, the 3-year, the 5-year, the 7-year, the third, right? Next, I want to say the end of August, and it may even be the beginning of August. Shame on me for not having the exact day. They're going to release another one. In other words, this is how much we're going to have to increase the size of these auctions from here on out, right? My guess is they're going to add more billions, right? Because, I mean, that's all you can do. Instead of $1 billion, we'll add 2, right? And we'll do that for 90 days. 90 days later, we'll come out and make another one. You know what? Instead of adding 2, we got to add 3. Instead of adding 3, we got to add 5. At the same time that we're trying to sell these things, yesterday's 2-year auction, the highest rate in 10 years. I go all the way back. I think it was actually almost the highest rate in 11, but in 10 years. Right, which just means what? In order for us to finance our debts, we've got to keep paying more. We actually got lucky. Think about what 0% did. Allowed us to borrow about $10 billion and make it look like we didn't. Now we're going to borrow $20 trillion, and we're going to realize what it's really going to cost, and that's really part of the problem. Just another thing, right? What do we got to prepare for? Why do I got to put it away? Pensions. We haven't even talked there. I can't tell you how many articles have come out on pensions and how bad things are really getting. Right? They're not going to make it 10 years. They're not. I mean, some will, depending on where you live, but we know the ones that aren't. And now you throw in a trade war and a currency war on top of it, and you can start to understand. And now it seems like the Republicans are starting to run a little scared on the president. I hope that's not the case. Just telling you what I'm observing, and I've seen a bunch of them now coming out on TV, and they're getting nervous. Right? My guess is probably because they buy Beamers and Mercedes, and they don't want to pay for it. But I don't know. What do I know? 800-951-0592. That is our toll-free number. The $5 special, $5 Liberty Gold coin, the $5 American Gold Eagle. You put them together, it's $500. No shipping when you order that package at 800-951-0592. Here's one other thing, and I'll get to it real quick. Mine supply. Number one miner in the world in gold. We know it's the Chinese. And we've been talking how gold supply has been starting to dwindle faster and faster. China came out with their first half number of mine supply down 7.9%. Right? They knew it was going to fall bigger than they expected, only 190 tons. China 2 years ago was doing 430. Last year they were at about 415. This year it looks like they're going to be below 400 and falling. Matter of fact, I guess I got it wrong. My bad. 426 metric tons last year. I apologize. This year they're trending to do less than 400 metric tons. Just put that into perspective. It's the first decline in Chinese mine supply 17 years. Guess what? It's not going to be the last. Patriot Radio News Hour, final segment coming up. 800-951-0592. Everybody supported everybody. The $5 gold special, right? It's not $5, obviously. It's $500 for a $5 Liberty gold piece and a $5 1/10-ounce American Gold Eagle. Free shipping when you buy the package at 800-951-0592. And there's still 2 lines open. Incredible. Time to get ready again. I know it's summer, it's hot. It's time to get ready. Speaking of getting ready, the Washington Post is now reporting the meeting, as far as I know, has not taken place yet. Jean-Claude Juncker is in town, and he's the trade rep of the EU. But according to the Washington Post, several of President Trump's senior economic advisors believe the president plans to impose a 25% tariff on $200 billion in foreign-made automobiles. Of course, the EU is saying they'll respond. Here's the thing that I don't get. We only imported $192 billion total last year in foreign autos. So does that include autos from Mexico as well? I guess that's my question. I know about Mercedes and Beamer and all and that, so I'm not sure. It may be a little bigger than what I'm thinking. I don't know from what I'm reading here, but the United States imported a record $192 billion in vehicles in 2017. So Trump plans to tax all foreign auto imports, at least according to the sources inside of the Trump administration being reported. Of course, it is the Washington Post. So, but I just want to let you know that's what they're looking at. The president is out with a tweet, and again, I've been telling you, there's been a lot of people getting uncomfortable here. Every time I see a weak politician asking to stop trade talks or the use of tariffs to counter unfair tariffs, I wonder what they could be thinking, the president said. Are we just going to continue to let our farmers in country get ripped off? And the answer is, yeah, that's what they want. Yeah, that's exactly right. Well, and here's the problem, right? We did it already, right? And nobody wants to pay the price for what it really will cost to bring it back. Could you imagine if all of a sudden 100% of all cars that were bought and sold in the United States were done by workers in the United States? And I mean all the parts, too. Even today, the cars that are put together, so many of those parts come from overseas. I mean, let's not kid ourselves. But, man, it would be great. Wouldn't it be great? Get the factories going, get the steel mills going. Right now, we got stock buybacks going, right? That's not enough. Right? Stock buybacks not enough. But that just came out from the Washington Post. Again, like I don't believe the meeting is even taking place yet. It won't be for another half hour, but we'll keep our eyes on it. I'm sure we'll talk about that tomorrow. Before we head out, once again, $5 Liberty gold piece, $5 1/10-ounce American Gold Eagle, $500 delivered at 800-951-0592. Patriot Radio News Hour. Everyone take care. Have a great rest of your day. We'll be back tomorrow.